Hi everyone, we are going to learn about bank reconciliation today. This is another lesson of accounting at secondary or tertiary level. So this is for you. If you don't understand what bank reconciliation is, I hope that at the end of this lesson you will understand what is the purpose of a bank reconciliation and how do you do that. So by reconciling, we are basically correcting the bank and the books of the business. That is what we do. Consider it an auditing. You are auditing the bank statement and you're also auditing the journals of the business. By comparing the two, you're able to identify what is the difference in terms of all the incomes and what is the difference in terms of all the expenses. And you're also able to identify the errors that have probably occurred externally, which could be from the bank, and internally, which is from the journals of the business. What is the purpose and why is this important, right? Remember that if especially you are using a manual path or system to record transactions within your business, the chances of making an error are very high, right? Because your employee could record things correctly. For example, there was an income of 5,000 and they recorded 500. It also helps to identify fraud, right? Because once again, you cannot fully trust everyone that is working within the business. It could be possible that they decide to do a criminal activity, and you have to be the person that reconciles and ensures that you identify anything that seems suspicious. Once again, you have stakeholders within your business, so therefore it does help you to ensure that your records or your financial records are accurate and they're presentable to anyone who's going to have a look at those. Why or what could lead to differences? Remember what we said. We said that bank reconciliation helps us to identify the differences. Now, what is it that, or the reasons for the difference? I'm going to have to make an example. Consider an outstanding check, right? We issue this check or we issue a payment and we pay a supplier. Before it can get to the supplier, it has to go through our bank, the business's bank, right? So we as a business, we issue that payment, and before it gets to a supplier, it might take, 4 days, 5 days, you don't know, right? So it could be delayed checks. So we refer to checks that have not yet been processed by the bank as outstanding. Then we could have a deposit. Now I want you to think about it from the opposite side. From the opposite side, we have a customer who maybe bought on credit and they decide to pay us. But in paying us, it has to go through their personal bank, right? So in that case, what does it mean? It means that it could take days before we receive that money. And when we see the bank statement, we realize that actually there's a deposit that we received. But on our side, it hasn't yet been notified. And of course, at the end of the month, at the end of each month, this is a practical part. Banks will always charge interest and bank charges. That is something that you need to be accountable for as an expense of the business. Another thing that could happen, like I also said, employees within the business can make errors. Even employees within the bank can also make errors. So the two journals, as well as the bank statement, have to be compared to identify all these 4 differences that can occur. Here's an example that we can have a look at. we have a cash book balance. We have a bank statement balance. Then we have our standing check of 2,000, and then we have bank charges of 500. If you were to reconcile this from the cash book, the journals, you would start by taking the journal and making sure that you minus the check, which is the payment, right? Assuming that this payment was not recorded in the cash payment journal. So now you have to minus it. Because if you think about it from the background of your mind, once you have the total of your cash receipt journal and your cash payment journal, income minus expenses, meaning that receipts will minus the payments. And that is why this outstanding check has to be minused. And then we also minus the banking charges, assuming that it was also not recorded in the cash payment journal. So therefore, we have a new cash book balance of 9,500. That is basically how you would go about adjusting balances of the cash book. Then let's proceed. Here's a step-by-step guide that you can use if you really want to make sure that whenever you reconcile, everything is 100% accurate. You need to make sure that at the end of the day, the balance that you have in the cash books are equal to those that are in the bank statement. Step number 1, start by comparing your records. Use highlighters if that could help. Compare the what? Compare the journals. That is the first thing you need to do. You start with the cash receipt journal, and then you compare the cash receipt journal with all the incomes that appear in the bank statement. By doing so, you can only work with incomes and identify, okay, I see income that is not in the journals, but it's in the bank statement, or the opposite. Then in the comparing process, you also take the cash payment journal and then you compare it with the payments that appear within the bank statement. By doing so, you can be able to see, okay, I see a payment in the bank statement, but it does not appear in the journal. Then you make use of highlighters as you go. Once you've done the comparison, you already have an idea of what is different, what could be an error. Step number 2, that's when you take the common items. So it's the opposite. You either take what is different or you take the common, which is also combined with step number 3, where you identify the differences, because the differences is what you need to reconcile. And then step number 4, you start with the business, and I refer to this as yourself, right? When you reconcile, you need to think of the business as yourself. Start by correcting the journals. Once you know that your journals are correct, then you have the power to go and do the reconciliation statement, because you know that within yourself, within the business, everything is 100% accurate. And these are the tips that I have with you. Remember, right, you need to plan. Always start by looking at the bank statement balance that you're given. Identify outstanding checks, identify outstanding deposits, and then from there, work on the steps that I provided you earlier on. Otherwise, good luck with your test or your assignment on bank reconciliation. We will be dealing with a lot of activities on bank reconciliation as well. Thank you.